Hello, I'm Shadow. We will learn about tax revenues. A tax revenue is the income that is gained by governments through taxation. Taxation is the primary source of government revenue. Revenue may be extracted from sources such as individuals, public enterprises, trade, royalties on natural resources and/or foreign aid. There are two types of taxes, including direct and indirect taxes. Indirect tax, a tax, which is levied on the income or profits of the person who pays it, rather than on goods or services, such as income tax, wealth tax, estate tax, corporate tax, and capital gains tax. In indirect tax, on the other hand, a tax levied on goods and services rather than on income or profits, such as excise tax, value-added tax, and service tax. How the tax is calculated. The average tax rate paid by a corporation or individual is the effective tax rate. An effective tax rate typically applies to federal income taxes and doesn't take into account state and local income taxes, sales taxes, property taxes, or other types of taxes an individual might pay. For example, if a company has to earn $80,000 and pays $60,000 in taxes, the effective tax rate is to divide the income tax expenses before taxes. The effective tax rate is equal to $60,000 divided by $80,000, in which that the company paid an average rate of 75% in taxes. Ratio of effective tax is therefore 0.75. Here are the points to remember. The average tax rate paid by a corporation or individual is the effective tax rate. The effective tax rate is the average tax rate paid by the company on its earned income, and effective tax rate is often used by investors as a profitability metric for a company. So, you now know how to earn and pay tax revenues. Like, comment, and subscribe now.